So Rivian Automotive, the company had an IPO a month ago and now has a valuation of $100 billion, despite having zero net profit and zero revenue. Obviously it's super overvalued and nothing can justify this valuation. But let's look at the fundamentals and just figure out if it's worth investing if the price will be lower someday. So the company has 2 vehicles in production so far. This pickup truck R1T and this truck with 7 seats R1S. Pickup is a car that needed in rural areas, and the absence of infrastructure can have an influence on the demand of these cars. The main investor of this company is Amazon. The company owns 22.4% of the stocks, and Rivian to supply Amazon with 100,000 electric vans. And that's significant. The company also going to build a second factory, and I have to admit that the potential here is large. The demand for EVs is growing around the world. The company is backed with Amazon, but none of this can justify this insane valuation. Volkswagen costs only $17 billion more than this company, and it's a company with positive cash flows that already is selling a lot of EVs. It took many years for Tesla to generate positive cash flows, and this company doesn't have any revenue yet. I don't like investing in this type of companies actually, because they will be just spending investors' money and the number of shares outstanding will be increasing, so the part of the business that you buy will be smaller in the future, considering that many years of growth are already in the price. And we don't know how many years it will last, when the company will start generating positive cash flows. There is one more important thing to mention. Competition, obviously. All traditional car manufacturers started to produce their own EVs. Plus, we have new companies that are going to be producing electric cars too. Plus, we have companies that never produced cars, but now they are going to. For example, Apple. Apple hired Tesla's former autopilot software director some time ago. So what I'm going to say is that the competition will be insane. Right now the leader is Tesla, that sells 15% of all electric cars in the world, but Tesla can lose its first place because Volkswagen already sells 13%, and the number of cars they sell is increasing rapidly. So what do we have? The company is not generating any revenue at all. According to the most optimistic scenario, it will have about $8.8 billion revenue in 2023. And obviously the company will have to spend a ton of money in the next 2 years, even though they have a lot of money after the IPO. But sooner or later they will spend this money, and they will have to do secondary public offerings. We don't know how many years it will take for this company to start generating positive cash flows, so they won't have to do secondary public offerings over and over again. The competition will be insane, and the valuation of this company already $100 billion, which is more than General Motors, Ford, BMW, and many other car manufacturers. So my conclusion is that I don't see any reasons to invest in this, even if the price will be lower. But it doesn't mean that shorting this stock is a good idea. No. So that's all I wanted to talk about for today. Thank you for watching. If you are interested in more neutral, detailed, fundamental analysis of companies on the market, you can subscribe to this channel.